Good morning, good morning. This is Prince, 20th of March 2015. How's everyone doing? We're watching the crude oil markets. Rollover had happened on around 15th. The price is currently at 45.55. The charts are still bearish. 1 hour and 4 hour are giving mixed signals. I've added just 200 moving average just for my reference. Let's get started. First of all, I want to mark some lower lows, previous day's lows and highs. And then we'll start discussing the trading price action. Let's look at our daily chart. Okay, so daily chart is still bearish. You see we had a spike here, a correction. It also shows at the same time a sideways trading range starting from 13th of March. You can see these highs. We tested those highs at 47 and dropped back down, which means the buyer are still not in control. There was a fake out breakout. You can see, you can just understand from the shadows here. Look, a little fake out. Buyers didn't gain control, so it is going back down. Another thing to notice that the bearish trend is still valid. And if you remember in previous videos or training videos, I've advised or suggested that the moving averages can also be considered as swing levels or support and can be used as support and resistance. Many technical analysts, they suggest or advise that don't use moving averages as support or resistance levels, but I do. Some agree to it, some don't, but it works. For some reason it works for me, so there's no reason it shouldn't work for you. But anyway, so this was the plan. It's a bearish trend. When the market came, when it made a spike up around this moving average, you should have started looking for a reversal pattern, which is an M pattern or engulfing pattern or whatever. You can see the reversal pattern. You can refer to candlestick charts and candle patterns there to see how a reversal pattern looks like, or you can go through videos on my blog to get to have an idea. So let's go to our H1 chart. Once again, I just want to see here what's this. Where was the moving average? It was around 46.92. So let's see what's going on in the short term. This is the high of March 21st. Okay, and since then we had lower highs, okay, and lower lows. On March 16th, they couldn't break below the previous day's lows, but the following day they broke below it. And on 18th March, it reversed, and there was a buy cross. And in my video, I did mention that you can consider this trend line as your resistance, and above the trend line, you could place a buy stop. So if you had a buy stop and you have a trend line being broken and the moving average is crossed and this stuff is in favor, and you had a buy stop above this by 5 pips, okay, let's say 90, this is a 156 pip move. It's good. And now what's happening is it pulled back around this trend line and it's trying to go up. Now here's the trading strategy that I feel this is what's going to happen. We spiked up. Now you're pulling back towards this trend line, okay, and this is our swing high here. We need to break above this swing high to continue towards the upside. Okay. Okay, but I really this is scenario number one. If the buyers are still in control, this trend line will act as a support, and there will be trend continuation from here. Or scenario number two, there could be a spike up, and the buyers will get exhausted when the price reaches 47.25. This is because the market is still bearish from the daily trend. The buyers will fail here, and you will see a reversal pattern coming in like this, like an M, which could directly go down. I don't see it continuing trending towards the upside on oil. So this is scenario number 1. Alright, so let's get rid of these trend lines. Scenario number 2 is this. Scenario number 2 is for current price action, which is we spiked up, the buyers failed. Yes, they did break above the previous day's high, and above previous day's high are buyers are and in control. But of course, the market moves in symmetry and zigzag, so they should have made a pullback and continued towards the upside and broke the trend further, which didn't happen, of course. So here's the thing. So if the buyers, this is just a fake out breakout, that's what I would consider it, a big fake out breakout correction, and the market still wants to go and make new lower lows. So this is the thing that I expect. We are here. This was our swing high. We've marked. You should mark the swing high. Now from here, or you can even take it here to understand the current scenario. Well, this is a bit challenging technical analysis, identifying pattern. Even myself as an expert, I can't plot this trend, the swing level. But I will consider this as the swing level. From here, we should go like this, down. We should trend down and break this low. Break this low. And then what's the next step here is it should create a pullback around this low and continue trending towards the downside. So first scenario was we make a pullback and continue towards the upside and fail at the highs again to short sell again to make money. Second scenario is this swing low. We have our shorts. We set a sell stop here. Okay, you can put a stop loss here if you want. Otherwise, you can put a sell stop here and continue towards trending towards the downside. A break of this support, and you can also put your sell stop below 44.25. So you can pyramid. One order activated here goes in favor. Second order activated here. So it's double-edged sword here. It's gonna act as a double-edged sword. So that's my opinion, and in summary, even if we had a further spike up around $50 a barrel, or around 48.45, let's say if we bursted up, I would still look for a bearish moving average cross on the 1 hour or 30 minutes chart. I would enter this short trade and continue for a trend to continue towards the downside. My risk is not much on the equity when I will take the lot, but I did cheat yesterday. Let me show you how I cheat. What I did was I used, instead, when the spike happened really, okay, it broke above this previous day's high, I expected that the buyers will lose gas because the daily chart was still bearish. So what I did, I went on 15 minutes chart instead, and I actually entered here at 46. What I did was I entered at a pullback. This is where the cross happened, and this bar, when the market spiked up towards the moving averages, I considered as a wave short pattern, and I entered a short sell trade earlier. I should take an entry on 1 hour or 30 minutes, but there were some additional compensating factors that made me take this trade early, and it worked out to be fine. On some of my trading accounts, I did take profits, and some I didn't take profits, expecting $43 the same day, 43 to be broken. But guess what? We went 44, 74 yesterday. The next month's contract is actually being traded $2 below. It is around 43. So let's hope. We're just beginning this month. So if you have any questions, feel free to ask. Post your questions in the Skype room. Send me WhatsApp messages. If you want to arrange a training session, a private one-to-one training on how to execute moving average cross strategy and learn risk management, conservative way to trade, you can ask me about that as well. And if you want to open a trading account, there's a link in the description box of this YouTube video. You can open an account with AvaTrade because you can hold positions with crude oil for long term. And that's it. Have a great weekend. I hope everybody had a great week. We'll stay in touch. I've got to go. Bye bye for now.